We're excited to announce that Jim Campbell Radio has now been unveiled on YouTube. You search Jim Campbell Radio. When you get there, please subscribe. You'll get all our updates. Content is regularly updated. And Forensic Talk with Jim Campbell and Business Talk with Jim Campbell, all of our podcasts are right there for you. Jim Campbell Radio. Inside the Tesla story and the electric vehicles revolution, the leading investment money manager on Business Talk with Jim Campbell. Vitaliy Katsenelson is CEO, Chief Investment Officer at Investment Management Associates, disciple of my investment hero, Warren Buffett. We had him on the show previously during one of the Berkshire Hathaway annual gatherings where 40,000 investors make the trek to Omaha. Primary focus is on discovering undervalued companies. He's also known for his uncommon common sense. Vitaliy's a prolific writer, too. He's author of Active Value Investing, Making Money in Range-Bound Markets, and the little book of Sideways Markets, How to Make Money in Markets That Go Nowhere. And this book, full of uncommon insight, available for free for only on Amazon, is Tesla, Elon Musk, and the EV Revolution. Welcome back, Vitaliy.
Jim, it's my pleasure. Let me just clarify something. That book used to be free. Now it's cost the whole like $4.99. However, your listeners can go to teslaanalysis.com. If they just put their email, we'll send it to them for free. So how's that?
Very nice. And it's available on Amazon, as you said, for just $4.99.
Yeah.
All right. We're going to go under the hood of on the value of Tesla and the story there. And I read this book, and it's one of the best exposés I've seen on this. And I finally got an understanding of sort of the EV value added and some of Tesla's value added that people may not know. First of all, they've reported 5 quarters of profits. We'll start in finance just because that's your expertise. They've never shown a full year profit in history. To me, there was a bit of fake news in there reading your analysis. There's regulatory emissions credits of $1.3 billion over the last 4 quarters. That's at 100% margin. You back that out. They've had operating losses of $744 million. They have an 800 times multiple right now on trailing P&E. What's fake news, and have they turned the corner profit-wise? Your assessment.
As to answer this question, we really have to step back a little bit.
Okay.
You can't analyze company like Tesla and just to look at what they made last quarter, annualize it, and say, oh, they're trading 800 times earnings. Just to give a context, I'm hated equally by bulls and bears of Tesla, and there are plenty of those. But because I am trying to be just objective, and I'm just trying to analyze. And when I wrote the book, the very first it starts that I'm quoting Fitzgerald, where I basically say that, where he said, and I forget the quote, but something along the lines that a great mind basically can hold 2 opposing views. And I think when you look at Tesla, you always have to kind of juggle this. You always have 2 opposing views. You have one hand, another hand. You're almost like an economist to some degree. Anyway, so my experience with Tesla started when I bought Model 3. This was a year and a half ago. And I was completely blown away by the car. This is coming from a guy who really cares very little about cars in general. But that car itself is so absolutely incredible. The experience of owning the car. And here's the interesting part. Usually when you buy a car, you buy an iPhone, you have this first hedonic shock. You kind of, you receive this enjoyment, kind of this dose of enjoyment, and then there is a steep drop off. I owned the car for a year and a half, and I still enjoy driving it a year and a half later. And there are many reasons for that. Number one, the electric motor is so much better than the engine than you have in a normal car. And this is something, it's almost like trying to describe a rainbow to a blind man. But there is no delay between when you push the pedal and when the car goes. You realize the delay is a really big deal. Then also, I cannot tell you how much I don't miss gas stations. I have a charger in my garage. I come home, I plug it in, I'm done. So that process is very easy. I never have to service the car. That car has a few dozen moving parts. When you're a traditional kind of internal combustion engine, and I would just call those cars ICE cars, they have thousands and thousands of parts that, and therefore the more parts you have, the more likely they're going to break. And so when I bought the car and I started driving it, I realized electric cars are the future. I didn't say Tesla is the future. I said electric cars are the future. Kind of the key point of the book is this. If Tesla goes bankrupt tomorrow and Elon Musk and Tesla have contributed so much, their mark on history has been made because they basically created the wave, the tsunami that's unlikely to be stopped. And I think when we talk about the car, another thing I like about the car is that every couple of weeks, the car gets this automatic update and suddenly new features show up. So you have that experience. That's what basically kind of got me into thinking and analyzing Tesla a lot more. And I spent hundreds of hours doing research on this. And what I realized that it's one mistake people make. They compare Tesla to General Motors and to other companies like General Motors. And I would argue that if this was just another form factor, then the comparison would be fine. But electric cars are fundamentally different from internal combustion engine cars. Okay, and therefore, you're comparing a product in one domain to products in a very different domain. It's like, well, you would not want to be comparing cars to horses, right? Or to horse carriages, right? Well, it's kind of like what you're doing a little bit when you're comparing electric car to internal combustion engine car, because yes, from the outside, they look very different. But the insides of the car, the insides are so different. I'll give you an example. If you look at Tesla, it's a transmission looks like a skateboard. And then you have two engines. If it's a four-wheel drive, it has basically two engines the size of watermelons that are sitting right on the axles. That's it. And you don't have a lot of very complex gear system, etc. transmission. That is it. In addition to that, it's a lot more of a hardware and software. My analogy in the book, and I think this analogy, it's not a perfect analogy, and analogies are rarely perfect, but I think it kind of drives the point very well, is that just like you could not compare an iPhone to a dumb phone, you cannot really, it's the comparison of electric car to ICE car. That's kind of like there are two different domains. Even though iPhone is called a phone, the call-in feature is actually the least important one. It's really a computer that also makes phone calls. Where you look at the dumb phone, it's basically a little bit of a computer and mostly a phone. One of the very important points I make in the book is that as an investor, and I think it's very important as an investor, it's not a market kind of looks at General Motors, Fords, and Volkswagens and Mercedes, and assume those companies will transition successfully to electric cars, and that may happen, but I don't think it's a foregone conclusion. And the reason for that, because when you go from one domain to another, your assets become your liabilities, and this is and I think this point is incredibly important because General Motors employs probably I don't know how many, thousands of engineers that specialize in perfecting that engine, that specialize in things that are completely useless. You have a skill set that's completely useless in electrics, okay. And so if you are recruiting engineers, first of all, the reason your assets become liabilities because at some point you're going to have to let those engineers go, and they're unionized, and you're going to
cannibalize your dealer network, right?
That's
servicing.
Right. Yeah, exactly. So anyway. So I think that's let's do this. That's a starting point of our conversation, and then when you look at Tesla, just like an iPhone, like Apple completely disrupted the market. Tesla has, if you look forward 5 or 10 years out, they have a chance. I'm not saying it's a certainty to completely disrupt this market and have a market share, that is basically much greater than kind of a disproportionately high market share. If they succeeded that, and this is an if, and this is an important point, and this is where you are alluding to, and they actually make money on producing cars, then you can see the earnings being so much higher. And then, so then you may find out that the valuation is not as crazy as it appears. However, and I just wrote an article about this, which is actually not part of the book, but this is kind of like an addendum to the book. Mm-hmm. If you look at Tesla's valuation today, it assumes that has already happened.
I'm gonna stop us right there and keep a little suspense as to what he thinks will happen if they turn the corner in our second segment. This is fascinating stuff.
Would you like to host your own radio program or podcast? Park City Productions 06604 is a Bridgeport, Connecticut-based radio broadcast solutions company. Follow us on Instagram, like us on Facebook, and subscribe to our YouTube channel. That's Park City Productions 06604. Call us at 203-522-8801.
If you or a loved one is a survivor of abuse by Boy Scouts of America representatives as far back as the 1970s, we urge you to speak up. We'll stand with you and get you the help and financial compensation you deserve. A jury in Portland, for example, awarded $18.5 million in punitive damages in one Boy Scout sexual abuse case. The Boy Scouts of America filed for bankruptcy, and funds have been set aside to compensate those injured. Time is limited, and so are the funds. Call today. Don't wait. For free information on how to file your claim, call All Survivors Advocates right now. We have a long track record in helping our clients get the legal justice and compensation they deserve. Please, we are ready to help you. Call today.
800-364-2984. 800-364-2984. 800-364-2984. That's 800-364-2984.
We're back with Money Manager Vitaliy Katsenelson on Tesla. He was going through the way to look at the valuation. And just to give some background, right now at the price, the market value is 5 times the combined Ford and General Motors. Their stretch goal is 500,000 cars for Tesla. GM does 660,000 in the third quarter alone and 10 million in total. The short sellers have always been after Tesla. Let me turn it over to Vitaliy.
Yeah. So if you look at Star Trek has this concept of a wormhole where you can basically go through space by you have this shortcut through space and you can go billions of light years in matter of sense because it's a wormhole. So I think today Tesla is trading like there's a wormhole through time. It basically assumes that Tesla has succeeded, which is an assumption, and then it's that it basically is able to produce maybe almost 10 million cars a year, and this is an important point, and that the probably hundreds of billions of dollars, or at least tens of billions of dollars of capital that's required to produce those 10 million cars has also did not that have happened and did not have a cost with them. So market completely ignores the time and the cost of getting to the production of those cars. So I was kind of in the reason I was why my analogies is not perfect, comparing like let's say dumb phones and smartphones, because producing cars, still it's a very capital intensive process. It requires a lot of capital. You still have to bend a lot of metal. So it's a software and hardware, but there is still plenty of hardware to be made. So anyway,
and Tesla seems to have an ongoing cash drain problem, which they dilute their holders by always getting, issuing equity, which makes sense because it's so overvalued. Before we get back to that, I want some of these other benefits from the EV cars really were interesting to me. One, you went through that the EVs are much more efficient than the complexity of the ICE cars, but there's regenerative electricity from braking. Explain that a little bit.
Yeah. So what happens basically, when you're driving and you want to slow down, instead of you pushing brake, you just basically let off the gas pedal. I'm not sure what you call it. There's no gas, but electric pedal, I guess. You let off the what would we call the gas pedal, and when the car starts naturally slowing down, and when it's slowing down, it starts generating electricity, which goes back into the battery.
Wow.
So, yeah.
And there's a safety benefit from the trunk is actually in the front, acts like a bumper. Explain that a little bit.
Yeah, so it's kind of interesting. So it's actually electric. I think it's probably going to be true to all cars, electric cars, not just Tesla. But basically, when there are two benefits. Number one, in the normal car there is an engine up front. So when you get in a car accident, head collision, the engine that's what pushed into the driver. In the electric car, there's a frunk, which is basically just an empty space where you can store extra luggage, and that is like an enormous energy absorbing bumper. There's another benefit also in a side collision. The battery provide also absorb because the battery is basically the bottom of the skateboard, and it's also absorbs energy as well. So it's almost like you have this reinforced frame at the bottom as well. So it is a safer vehicle in general than a normal car.
The dependency on batteries, right?
Yeah.
First off, is there the risk and danger of these things catching fire that we're told about?
Yeah. So let me actually tell you a story which is very interesting. That's not in the book. It's a story of how Tesla came to making the battery it's making today. I was listening to an interview of the guy who runs LG battery division, and he said a story. So this is 10, 15 years ago. Tesla wants to make an electric car, and they go to all the battery manufacturers and say, and asking them to make a battery for them. And everybody basically tells them to get lost because nobody wants to take a risk, with this little startup. Then they come to Panasonic, and at the time, maybe this probably was close to 10 years ago, the demand for laptops has declined temporarily because of iPads. So Panasonic had an overcapacity in the AA batteries, because I think those are the type of batteries that go into your laptop, I guess. So Panasonic said, fine, we'll give you our excess capacity in those batteries. And this is how Tesla started. This is why if you look at how the traditional battery design of ICE cars, if you look at the route that the traditional car manufacturers have taken with batteries, those are flat batteries, kind of like solid batteries, where Tesla has cylindrical batteries. Okay, so that's why. So the Tesla has taken a more difficult and more dangerous route into creation of its battery, because it's using chemistry which basically has a higher density of storage, so you can store more energy. And it charges faster. But the downside, it's more flammable. It's more volatile. And so the way Tesla is dealing with that, they created this very sophisticated battery management unit. It's almost like, imagine you have a I don't know, I forget the number, thousands of little batteries packed in this enclosure that is basically managed by a very sophisticated computer that constantly takes temperature readings, etc. And then if one of the blocks starts to overheat, it stops using it and redirects it to another block of batteries. So Tesla has taken a very kind of interesting approach to that. They took the problem and turned it into a bug and turned it into a feature, basically. So I think over time, in general, whenever, and this is true with almost any technology, whenever somebody gets mugged in a taxi, you don't see national news about it, right? When somebody gets mugged, taking Uber or Lyft, it's in the headlines of every newspaper or TV station, because those are new companies. A friend of mine's Lexus was, 5 or 7 year old Lexus, just caught fire, just sitting in the parking lot. You did not see this in national news because Lexus unfortunately does not make news anymore. But whenever you see Tesla catching fire in Russian, like there was a true story. It was sitting in the parking lot in Russia and it caught fire. It was in every single local news, right? So my point is, those cars in general, are they perfect? No, but are they less safe than ICE cars? Well, let me just think about it. Would you rather have a battery? Would you rather ride on a battery or on a tank of gasoline that's highly combustible? So in general, there are not any, they probably would argue probably more safe. I looked in the book, I go through the numbers, and the numbers show that statistically they're more safe than, from that perspective, than ICE cars.
All right, we'll be back with our third segment, and Vitaliy talks about an interesting gold rush we'll talk about coming up. We're back with Vitaliy Katsenelson. He's got a book on Amazon for just $4.99, or email him and you can get it for free. Tesla, Elon Musk, and the EV Revolution. Now, I was fascinated. One thing you started off saying, you don't miss gas stations, right? But right now, there's not a lot of places to charge your electric vehicle, which is going to induce some anxiety. You've seen kind of a future vision on what's going to unfold.
Just Jimmy, clarify. Don't email me. Just go to teslaanalysis.com and get it there, because if you email me, I won't be able to help you. So when I got my car, my wife asked me, well, so how are we going to charge it? Like, so my car, the way it's charged today, I spend $700 and I basically have a 220 volt plug in my garage, similar plug you would have for your washer and dryer. And basically it takes 40 miles per hour to charge my car. And my car's capacity is about 310 miles. So if I charge it at home, it would take 7 hours. If you fill in a tank of gas at the gas station, it's going to take 10, 15 minutes. So you see the problem here, obviously. However, most of us, we sleep. So we drive, we get home, we get, park the car in the garage. We have, and most actually, so we can charge it. So we have 7 hours to charge it if we need a full charge. Number one. Number two, average American drives about 40 miles a day. So in other words, we don't drive enough that we need a full charge all the time. Point number, another point is that whenever we make draw a direct comparison between gas stations and charge stations, we are basically applying the thinking of the old domain to a new domain. If you want to build a gas station, it costs millions of dollars, and there's a huge environmental impact. To build a charging station would cost thousands of dollars, not millions of dollars. And I think, referring to the gold rush, I think groceries, we get to the point where grocery stores and building parking lots will be filled with this kind of almost like ATM machines. You drive up, you put it in, and while you're in the store, it charges. But here's a little caveat here too. Tesla has a few thousand superchargers in the United States. And when you charge your car, the supercharger, it basically, you can charge up to 80% of your car in about 20 minutes. So you go to a grocery store, you plug it in. When you come back, you're 80%, you're 250 miles charged. Okay. And I think the gold rush we're referring to is that the grocery stores will start attracting shoppers by having those charges on the parking lots. They probably won't be using their money. They'll be, you're going to have public companies, or companies will be raising money, and it's going to, and in the book I go through the numbers. It actually becomes a very attractive investment. The return on investment is fairly high, and because it doesn't really take that much capital to build one of those things. So
what is it costing you to fill your tank up with electricity?
Yeah, it's basically cost me about between $10 and $20 to get 300 miles. If I charge it at home, it costs maybe actually $8. If I charge it at the Tesla supercharger, it costs maybe closer to $20. And here's the interesting part. So the pushback I get, and I get this all the time, what about when you drive long distance? Okay. My argument would be twofold. Number one, you can still have so this is a weak argument, but in the short run, if you want to drive very far, you have a normal car and an electric car. So if you want to go far for mile drive, you take your normal car. If for daily commute in the city, use your Tesla. But the strong argument is actually Tesla has all these superchargers throughout the United States. So I've drove to New Mexico, to Santa Fe from Denver, 360 miles, and there are superchargers, and it was not an event. It just, we would, every 3-4 hours, we would stop by for 20 minutes. My car would get charged. We take a break and keep going. So it was really, it's a little bit more stressful today than it's going to be 3-5 years from now. And I think this is kind of the point I want to stress too. When the first iPhone came out, I remember a lot of people who were saying, but look, it doesn't do this. Look, it doesn't do this. You couldn't do copy and paste. You could not talk on the phone and at the same time use the phone or whatever. Right. Yeah, it was not perfect. But here's the thing. It was good enough, to start the change. And guess what? The phone you look now and the phone that was 10 years ago, you look at if you look at the first phone, it's like it was, you look at it's laughable, right? Yeah. But it's that little device from 10 years ago, 12 years ago, that has transformed the global economy. Tesla today, you look at electric cars 10 years from now, you look at our infrastructure 10 years from now, guess what? The capitalism will win. At some point, we're going to have those charging stations everywhere. And, 65% of Americans own a home. So they're going to have a charging station in their garage. And it only costs $500 to $700 to put one there.
Let's look at Tesla. Do you see competitive moats that they have? And one that I thought was interesting was this data algorithms. They've got 1 billion miles of data already in their tank that they can use for algorithms. Talk about if there's a moat, and of course batteries is part of that too.
Yeah, so the Tesla does not own full technology on the battery, but they own a lot of it. So that's one of the modes. Full self-driving, I think, will become a mode in the long run because Tesla keeps collecting all this data. And so if you think about self-driving, what makes it difficult is that you can get it to work almost all the time. The only problem is that almost is very dangerous. The time when you don't get it right, you kill either the driver or the pedestrians, etc. So that almost is not has to be incredibly small number. And to get there, you need a lot of data. You need to go through a lot of instances, process a lot of data, and Tesla has that advantage. One point I want to stress here, though, is that full self-driving, even though Tesla will be telling you it's a months away or years away, I would argue we are 5 or 10 years out from a full self-driving. Aside from the fact that it's going to take a long time to get to the safety numbers regulators will be comfortable with, you also need a legal framework for that, because when you run over somebody, who's responsible? Is it you or it's the car company? I mean, we don't have a legal framework for that either. So that's a very complicated question too. So
let's begin to get into Elon Musk. Obviously, that's a big issue. One question before that actually is, and this is just from me, and I wonder, the software downloads are automatic and they add a lot of value all the time, just like they do to your phone. Is there a risk of hacking? And we have cars on the road now.
Well, I think obviously there is whenever there is software, there is a risk of hacking, right? The risk of hacking is zero if there's no software. I would argue Tesla is probably aware of that risk, and so the risk is there. How big it is, I have no idea. I'm sure they're quite aware of that. How dangerous that is, and so I hopefully they thought of that.
I had this horrible vision that there's 1 million cars on some California highway, and there's some 400-pound Russian guy in his basement, and he stops all the traffic or something.
Oh, I'm sure we're gonna have some sci-fi thrillers made on the topic. Yeah, sure.
Okay, so we'll talk about Elon in the next segment, but in the remaining segment here, you got him. He's got involved with SpaceX, robo taxis, underground highways, batteries, Neuralink, Solar City. Is he too thin. What the heck? How can a human being run all this?
Yeah, no, I think that's a good question. And he's a very polarizing figure. It's a kind of, the short sellers think he is a snake oil salesman, and the bulls feel like he is the kind of the technology Jesus kind of thing. I don't know. I think it's kind of interesting. I think when you approach Tesla, you have to think in nuances. Nothing is black and white. This is kind of the, Fitzgerald quote was addressing that. And I think he is just like Steve Jobs was a polarizing figure, when he, especially in the beginning of his career. I think Elon Musk is very similar in that regard. He makes a lot of times he sets incredibly ambitious goals. Just think about what he has done. Just think about SpaceX, right? He's basically was able to do what nobody has done before. Like, you basically have a private company going to space, right? No, I never had. So you need to have set incredibly ambitious goals. A lot of times, these goals are so ambitious that even if you achieve 2/3 of them or half, and you do it, it's going to take you, twice as long. That's still a victory. And the problem is when you run a public company and you set these very ambitious goals, and you achieve them 3 years late, and you don't achieve them 100%, it's kind of the public shareholders struggle with that.
All right, we've got our final national segment coming up. We'll do a little bit more on Elon Musk. This is fascinating stuff with Vitaliy.
If you're trying to quit drinking or doing too many drugs, listen to me. You don't know me and we'll never meet. I had a problem like you once. I drank and used to party a little too much till it got out of control and almost ruined my life. I realized I needed help to fix my problem before it totally destroyed me. If you've tried to fix your drinking and drug problem and you know you can't do it alone, you need to call the National Treatment Advisors. They'll immerse you into a 30-day program to replace your old habits with new habits and totally change your life. And if you have PPO private health insurance, the entire program may be covered. Fix your problem right now before it gets any worse. Get clean. Call now and learn more. 800-296-0906. 800-296-0906. 800-296-0906.
We're back with CEO and Chief Investment Officer at IMA, Vitaliy Katsenelson. You talked about this a little bit, but and you're talking about Fitzgerald having to hold contradictory visions. Where do you see the borderline between visionary and a con man with Elon?
One thing you have to understand, that people are flawed, and they're flawed in the sense that, so if you think about Tesla, it is a somewhat, and it's a lot less so now, but it was, when I wrote the book, a path-dependent company. And let me explain what I mean. The company was losing a lot of money for a long period of time. It never made money until recently. And as you pointed out, a lot of that profitability, even today, comes from them selling environmental credits. So company constantly bleeding money. It's a capital-intensive business, so they constantly require new capital. So the reason it's path-dependent, because it's almost a little bit like a pyramid scheme, kind of. Okay, I got to be careful here. But basically, for them to succeed, they constantly need new capital, so they need to raise money. How do you raise money? You really have two options for the most part. You can raise debt, which at some point will bring you down because if you have too much of it, or you can raise equity. And here, this is where it becomes very important. The more expensive your stock is, the cheaper that equity is. So in other words, okay, and so therefore, Elon Musk's job, to some degree, is basically paint these incredible dreams and turn shareholders into these believers. And this is where it becomes self-fulfilling prophecy to some degree. If he has access to money, he can actually build the dream. Okay, so if he can keep issuing that equity, then guess what? He'll build those factories, he gets to scale, and Tesla becomes profitable. And guess what? He did not really lie to you. Okay. However, if somewhere in the middle of the story, people will say this emperor has no clothes, suddenly the stock price collapses, and when he issues new equity, he dilutes shareholders tremendously, and then suddenly this it falls apart. This is why it's a path dependent. So to some degree, its success depends on factors that are outside of his control. And let me just make this point, and I think this is a very, very important point. The company is benefiting tremendously from its high stock price, because now Tesla is able to issue billions of dollars of stock without diluting the shareholders, which is a very there is some circular reference inside of this argument. So the more expensive the stock price, the less likely the company will go out of business, and the more likely it will actually achieve its goals.
Interesting. Let me ask you this. He was going to take the company private for $420.
Yeah.
And was that, first of all, was that a basic fraud to basically kill the shorts? And also, he buys Solar City loaded with debt. And that seems to me a conflict of interest, buries it inside of Tesla.
Yeah, so I think so. Like now I give you the context to the story, right? So he's trying to have this image of Iron Man, right? He's the Iron Man who can do anything. So Solar City going bankrupt would basically kind of put a dent in this Iron Man image, right? So therefore, I think Solar City was never really cash generating enterprise, and probably was a failed enterprise. So them taking it private, or Tesla buying it, has basically bailed out shareholders of Solar City and so Elon Musk. But let me ask a question: did it actually benefit Tesla shareholders at the end? Because you think about it, and this is a very complex argument, but if Solar City went bankrupt, the Tesla stock price collapsed, and then Tesla would have to issue very expensive shares. Mm-hmm. Would it actually benefit Tesla shareholders or not? So this is so I would argue that what he did bail out Solar City and himself at the same time, because he was probably one of the largest shareholders.
Right. Yeah.
And a 422 tweet, I think part of it was to squeeze out short sellers. I mean, I think he was extremely annoyed with short sellers, and that's so you put the legality and morality of that behavior. Right. I'll leave it. Just again, this is not a perfect. This is not the Iron Man from Marvel comic book. This is a real human being who is working 18-20 hours a day, who is extremely exhausted, and guess what? So that behavior, that is illegal and immoral. It is what it is.
All right, let's finish off with, first off, would you buy this stock? Because it doesn't seem to fit your own vision. And two, is the ICE internal combustion engine car going the horse and buggy whip way? Dying.
I think I would not buy it at today's price, because the future is fully priced in. I think there may be time when I would buy the company. It's when the valuation would be different, and the price would be different, and I would be more comfortable with that. But I'll be honest, if the price was a lot cheaper, I may have bought it today. So that's I'm not 100% certain about this, but chance of that would be much higher, that I would have bought it at a very different price, because I think chances of them going bankrupt are very, very small now. That's point number one. To the ICE makers, I think the ICE cars are going away. The question is when, and it's very difficult for me to say when it's going to happen. But I think at some point we'll get to the point where my analogy would be, at some point there were a lot of horses when they cars at some point the streets of New York were still dominated by horses. Mm-hmm. And then the regulators, they said at some point, you know what, we should outlaw them. You can't ride a horse in the streets of New York anymore. You can ride a car. You can drive a car. And I think we'll get to some point, and I think the regulators will probably put the last nail into that. So I don't know where that point is yet. Like, I know that our electric grid infrastructure cannot handle, like, if we went overnight, which is impossible, to electric cars, our electric grid would collapse. We just can't handle it. So it's going to be gradual transition, which would require us redoing our electric grid too. So and in the book I talk about this a lot too. And unfortunately, this would be 5-hour conversation with you, not a 40-minute conversation with you for us to address that.
Well, we've certainly learned a lot. I've learned a lot, and I assume our listeners have. I want to thank Vitaliy Katsenelson for his time. This has been Business Talk with Jim Campbell. You can subscribe to our YouTube station, JimCampbellRadio.com, and you can pre-order my book as well at Amazon, Madoff Talks, Uncovering the Truth Behind the Most Notorious Ponzi Scheme in History. It'll be out April 27th from McGraw-Hill, and it's available now for pre-order. We'd appreciate that. Get Vitaliy's book as well. Thanks to Vitaliy Katsenelson. Thanks to our national audience for listening. See everybody on the next edition of Business Talk with Jim Campbell.
Jim, thank you.